In this week's crypto news, Mark Cuban is involved in a class action lawsuit which accuses a billionaire of defrauding investors with a $5 billion crypto Ponzi scheme.
Another cryptocurrency has crashed after a hack. This one, however, was a stablecoin. We'll have the details.
Blackrock, the world's largest asset management company, is launching its own Bitcoin trust, giving big Wall Street investors the opportunity to go crypto.
Plus, we'll speak to the president of Off-the-Chain Capital about recent hacks on crypto exchanges, as well as what the markets may look like after the big financial news we received in the past 2 weeks.
The Ethereum merger is getting closer and closer. Ahead of the big move, Coinbase announced that it will temporarily suspend certain token deposits and withdrawals. What you need to know coming up.
We have market prices to cover, daily winners and losers to declare, and smart money moves to uncover to maximize your portfolio. All that and more on this episode of Crypto Market Today. We're your hosts. I'm Lucy Vanghouse.
And I'm Brian Hoffman. Thanks for joining us today. But before we dive on in, don't forget to give this video a like and a subscription so you don't miss out on the latest crypto news. Let's start with a look at the markets. Now, Bitcoin has been in a bit of a downtrend this week. The crypto king is down 1.6% over the last 7 days and down 2.8% in the last 24 hours. It's been almost 2 months exactly since Bitcoin hit a 52-week low price of $17.7 thousand, and now that it's had about 2 months of up-only prices, up roughly 25% from the bottom. The latest downtrend has many Bitcoin speculators wondering if it's heading back to at least test the bottom prices yet again. If history holds true, though, $17.7 thousand should be the bottom of this current bear market cycle, but that doesn't necessarily mean that Bitcoin won't test those lower prices once again. Check out this chart, which shows Bitcoin's 500-point price drop in less than 60 minutes. Now, the quick action liquidated $6.1 million in short positions on the run-up and $16.3 million in long positions on the way down. A good reminder to be very careful if you decide to use leverage on your positions.
In a somewhat historical turn of events, Ethereum flipped Bitcoin. Not in the traditional market cap sense, aka the flippening, but on the open interest chart. As we can see from the chart, Ethereum open interest flipped Bitcoin open interest in early August, the first time in history for such an event. Speaking of Ethereum, let's see what the number 2 ranked cryptocurrency has been up to. Ethereum, like Bitcoin, also saw prices heading in a downward trend this week. Ethereum's price hit a 7-day high of $2.02 thousand on Sunday before turning bearish for the week and then dropping 9% from the weekly high. And we can't talk about Ethereum prices without mentioning Ethereum's upcoming merge. And as it stands today, Ethereum and the crypto world is less than 30 days away from the much anticipated merge date. And that's expected to be sometime between September 15th and September 17th.
Well, I'll be looking forward to that and, of course, give you updates right here on Crypto Market Today. Taking a look now at the Bitcoin dominance chart. Not much new to report here as the positions of the major players at least remains mostly unchanged. Bitcoin stays in the number 1 spot with 40.1% market share. Ethereum, of course, is in second place with 20.8% of the market share. And Tether, or USDT, is in third with 6% of the market share. On a list of CoinMarketCap's top 100 cryptocurrencies, Chili's ranked 46 by total market value. That's the week's biggest gainer. Chili's, which bills itself as the leading digital currency for sports and entertainment, rose by 42% on the week, outperforming its competition.
And on the other side of the top 100, Brian and I flipped a coin, and I get to declare this week's biggest loser. This week's biggest loser is Mina, ranked 82nd by total market value, is, of course, this week's biggest loser. So the crypto fear index is currently at 30, indicating that fear is the predominant sentiment amongst market investors. The index is down 11 points from last week, meaning that market sentiment has grown more fearful over the last 7 days.
And before we get into the big stories of the week, here's a quick word from our sponsor, Unicoin.
Today, we're offering you a very special gift, 100 free Unicoins. Unicoin is the first equity-backed, dividend-paying cryptocurrency, well-positioned to become the leader of the crypto market. In such case, your 100 Unicoins may become a $4,000 value. Unicoin was launched by unicorn hunters, the famous business show with stars like Steve Wozniak, the legendary co-founder of Apple, and Rosie Rios, the 43rd Treasurer of the United States of America. Simply go to unicoin.com/100 and enter the name of this YouTube channel as the code to claim your free Unicoins. Unicoin, the currency which pays you, is well positioned to win over currencies which shrink in value.
And just to remind you that Unicoin is the first equity-backed, dividend-paying cryptocurrency and a sponsor of this program. And it's also ending their first public offering. The retail price is set to double from 10 cents to 20 cents on August 31st. So if you're interested to find out more about Unicoin, visit www.unicoin.com. And we'll, of course, have a link in the description below.
Now on to the major crypto news stories of the week. Mark Cuban may find himself in some hot water soon, as a lawsuit filed in the District Court of Southern Florida accuses a billionaire of misleading investors by promoting cryptocurrency on the now bankrupt brokerage Voyager Digital. With 12 lead plaintiffs, the suit references a case of Mark Cassidy v. Voyager Digital from last December, which claims that Cuban, quote, went to great lengths to use their experience as investors to dupe millions of Americans into investing, in many cases, their life savings, into the deceptive Voyager platform and purchasing Voyager Earn program accounts, which are unregistered securities, end quote. It does go on to say, as a result, over 3.5 million Americans have now all but lost over $5 billion in cryptocurrency assets. This action seeks to hold Cuban as well as others and his Dallas Mavericks responsible for paying them back, unquote. The new suit does claim that Voyager Digital is unregulated and unsustainable fraud, similar to other Ponzi schemes that, quote, specifically target young and inexperienced investors, and that Cuban, quote, personally reached out to investors individually and through the Dallas Mavericks to induce them to invest into the deceptive Voyager platform, end quote. Cuban heavily promoted Voyager Digital after the Dallas Mavericks, which is owned by Cuban, entered into a 5-year partnership with Voyager, offering $100 worth of cryptocurrency to Mavericks fans who created an account and deposited $100 of their own cash. During a press conference, Cuban had then said, "I gotta add, I'm a Voyager customer and I have been a customer for several months now," end quote. Cuban went on to say during the press conference, quote, "I like it. It's easy, it's cheap, it's fast, and the pricing is actually really good. So we find it as a perfect fit for our Mavs fans and reaching Mavs fans of all ages," end quote. And we did reach out to both Voyager Digital as well as Mark Cuban himself and have yet to hear word back.
Time to talk about a few big hacks. DeFi protocol Curve Finance was hacked for about $570 million after hackers were able to change the protocol's domain name system, forwarding users to a fake clone with a malicious contract. The contract would then drain the customers' wallets. Binance later stated that it froze or recovered $450,000 worth of the hacked funds and is currently speaking to law enforcement in an attempt to return the funds to affected customers.
And we got another hack to talk about. Yet another stablecoin this time is victim of this hack, and it crashed over the weekend. Akala stablecoin, well, they had launched into a liquidity pool, and hackers took advantage of over 1.2 billion tokens by exploiting a bug in the platform. The stablecoin, which had a pretty good track record of a soft peg to the US dollar, sitting at right around $1.03 per token, well, that plunged down to a little under 1/10 of a cent. Aclo was able to, quote, burn the erroneously minted AUSD tokens and return to a price near the peg at 91 cents as of Tuesday morning, but as of Thursday morning, it's down to 83 cents. Now, I know several investors are skeptical about stable coins, and as you can see, they do become unpegged from the fiat that they're looking to match, and they're not really that stable sometimes. But it really could have been a buying opportunity for the right investor at the low of 0.009 cents. If you had put just $500 in, you could have made a little over $50,000 once the price bounced back up to that 91 cents. Now, of course, this is not investment advice at all, but sometimes fortune does favor the bold.
If only we would have got in. I get it pays off to sit in front of a computer all day, these crypto analysts. Yeah. Lucky guys. Speaking of investments, Blackrock, the world's largest asset manager with over $10 trillion in assets under management, is making a big move into the crypto space with the announcement of a spot Bitcoin private trust. This will only be available to institutional clients in the US, but will place BlackRock in direct competition with the biggest investment firm for crypto assets, and that's going to be Grayscale. BlackRock wrote in a blog statement, despite the steep downturn in the digital asset market, we're still seeing substantial interest from some institutional clients in how to efficiently and cost-effectively access these assets using our technology and product capabilities. This comes just after a deal was struck between BlackRock and Coinbase, allowing clients of its Aladdin investment platform to trade crypto assets with their combined $40 trillion in monetary assets. Interestingly enough, Kathy Woods, founder of ARK Investments and recent seller of a massive share in Coinbase, says in her new video that this could be a big boom in the Bitcoin price if investors just use the 2.5 rule to invest the crypto. Take a look.
Assuming that 2.5% on this $40 trillion platform, that's $1 trillion of demand. Now, it's not that, and that would more than double the Bitcoin price right there if we just assumed it was all done in Bitcoin, which this agreement is only focused on Bitcoin.
Well, the Ethereum merge, one we've all been waiting for, it is just weeks away. And as we approach the tentative deadline, which is between September 15th and September 17th, we're getting more and more information about what Ethereum will look like as it moves from proof of work to proof of stake. According to the Ethereum Foundation, the merge will not reduce gas fees, though. Writing, quote, gas fees are a product of network demand relative to the network's capacity. The merge appreciates the use of proof of work, transitioning to proof of stake for consensus, but does not significantly change any parameters that directly influence network capacity or throughput. Basically, it doesn't reduce the gas fees, long and short. As we did report last week, though, the merge will still reduce the network's energy consumption by an estimated 99.5%. During the merge, Coinbase announced that they will be briefly pausing ETH and ERC20 token deposits and withdrawals. Well, cryptocurrency is here to stay and will become even more popular as more people really get to know about it. It becomes more mainstream, and we start to see stock investors gain access to crypto ETFs, like we mentioned in Blackrock. Now, for more on this, as we look to what the market may look like in the coming weeks and a closer look into the recent hacks, I did speak with Brian Dixon, president of Off the Chain Capital. Brian Dixon, president of Off the Chain Capital. Thank you so much for joining me today. Now, I do want to just dive on in. First question I want to ask you, when we're talking about the stock market, obviously we talk about brokers that do help out with those larger investors, and it's kind of the same thing when it comes to the crypto world. Can you talk to me a little bit about what Off the Chain does for its clients?
So we are traditional Graham Dodd, Warren Buffett, deep discount value investors, and we apply that strategy to the blockchain markets. So if you break down our portfolio today, about half of our portfolio is in discounted private equity and profitable what we would consider blue chip blockchain companies that are private businesses. And we go to early employees and seed investors and act as a liquidity provider so we can buy their shares from them at a discount when they're going through life events. So usually they're forced or motivated sellers. They're having a child, they're getting married, they're having, buying a home, whatever that situation is, and they need some liquidity for the value they've built in their equity. We will act as that liquidity provider to purchase those shares at a discount.
So you did mention the blockchain a little bit. I kind of wanted to dive a little deeper into that when it comes to the amount of hacks that we're seeing, especially with these coins that are now going onto the blockchain and introducing the swap functions to be able to swap between coin to coin. What's your real take on all of the hacks that are going on, and what's corporations like Off the Chain doing to make sure to protect their clients' assets?
Yeah, so we take a really long fundamental view of our investment thesis for how we're allocating to digital assets. We're not investing in the early stage venture style protocols and blockchains and companies. In fact, that's very important to our strategy is these companies have to be very mature for them to be a candidate for us. And they've already gone through most of that venture stage risk. And the venture style, where you have a lot of these early stage protocols and blockchains that are developing, a lot of these are nascent technologies, and there could be security vulnerabilities. But I want to be very clear, because a lot of the security vulnerabilities are happening on some of the newer blockchains and technologies that are much more centralized than the decentralized blockchains like Bitcoin. So as an example, the Bitcoin blockchain itself has never been hacked. There's been exchanges that hold Bitcoin on the exchange. It's a centralized company. Those exchanges have been hacked, some around the world, but the Bitcoin blockchain itself has never actually been hacked. Now, with some of the newer emerging technologies, we are seeing different protocols that are in the smart contracting space, as an example, that'll have different smart contracts that would have vulnerabilities in them. And so these security vulnerabilities would allow a cybersecurity threat to infiltrate it, to be able to steal client assets from these protocols. And a lot of the smart contracting space is still very nascent as well. It's an emerging technology and asset class. There's a lot of different crypto assets and protocols in the market. So you have to be very, very careful about how you're engaging with these different systems. But what we're seeing today, that most of the hacks come from these vulnerabilities within the smart contracts themselves.
So finishing off, I kind of want to ask you, this week has been, these last 2 weeks, I should say, has been tremendous for the financial markets, for the crypto markets. We're looking at the Feds increasing the rate by 75 basis points. We're looking at the Bureau officially announcing that, yes, we are in the middle of a recession with the two negative GDP growth numbers. But we're also seeing the CPI data showing that we are maybe on the downward trend when it comes to inflation. What are you telling your clients right now? And really, what's your prediction, without bringing out your crystal ball, of what the future might look like with all of these new details that we just got in the last 2 weeks?
Yeah, so just the initial information yesterday of the CPI information was bullish for the markets. I think we saw a rebound in some of the markets. Bitcoin's up, Ethereum's up over the last 24 hours. And one thing's for sure, the government, regardless of CPI, they're not going to quit printing money, right? They just printed a Inflation Reduction Act to reduce inflation by printing more money. Not totally logical, but that's what they're doing. And then they have all these other new bills where they're going to be printing a lot more money. And so what that tells me is that as long as the government continues to print money like it's going out of style on an unsustainable fiat standard, we're going to be hit with inflation in the long term. Our purchasing power will decrease. The prices of goods and services will increase over time. And so to me, that makes digital assets a very attractive asset allocation, because Bitcoin, as an example, starts to really fight against that fiat standard, right? And so we're seeing more people that are recognizing what's happening with the governments and central banks. And even when the government releases their CPI figures, they're always dramatically less than the real CPI figures, because they're cutting out important metrics that are the very basis for which those CPI measures should be measured, right? And so what's really interesting about it is, they'll push it out in the media, and then people will get all excited, the markets will react, but they're never really telling the truth about what's going on with the figures, in my opinion. And so when you look at the digital asset ecosystem and how it's reacting to this, at first, when the inflation rates were much higher, the Bitcoin market and the crypto market dropped a little bit. And I think what we saw there was people that were treating crypto as a risk on asset, like a risky technology stock, started selling. And when we actually look at the analytics of the blockchain networks, the people that were selling were short-term holders of digital assets, people that had likely purchased digital assets in the last 150 to 160 days. But the long-term holders that have been holding Bitcoin and crypto for many years, those individuals weren't selling as much because they believe and have the conviction of what's happening with this digital asset movement. And so I think when the government is putting out this information, you really have to pay attention to what they're doing and not what they're reporting and what they're saying.
Makes total sense. And, definitely taking a look at what they do rather than what they say. Very important. Brian Dixon, president of Off the Chain Capital, thank you so much for joining us today. I really appreciate your time.
My pleasure, Brian. Thanks so much for having me. Thank you.
Thank you.
Now, if you want to check out the full interview with Brian Dixon and Off the Chain Capital, you can click on the link right above us.
Now time for the Smart Money segment powered by Nansen.ai Research and Analytics. The leading smart money destination for over the last 7 days is yet again wrapped Ether, with an increase of $85.8 million, although the token has seen an outflow of $9.4 million over the last 24 hours. The numbers indicate that smart money remains bullish on Ether. And on the other side of the equation, smart money is exiting its position with Aave interest bearing wrapped Ether. Approximately $155 million has been sold in the last week. Aave is a decentralized crypto lending platform, and what's likely happening here is that smart money is taking out Ethereum loans from the Aave platform as a way to farm the upcoming Ethereum proof of work airdrop. But more on that in a future episode.
And of course, we'll have so much more coverage on that, on the merger in the future episodes this week. And as the merger does come closer to that September 15th to 17th deadline. Well, we'll end today's episode with a little crypto arts and culture as we take a look at this week's #1 highest selling NFT. And the winner is, drum roll please, it's Bored Ape Yacht Club number 5383. Looks a lot better than the previous CryptoPunks, right? Well, the Bored Ape sold for 777 Ethereum, worth approximately $1.46 million at the time of sale. That is one pricey ape.
I'll never understand. We have to have a segment to explain NFTs to Lucy. Maybe we'll do that on next week's episode.
Something actually I'm working on, so stay tuned.
Leave it in your comments if you guys want to teach me anything about NFTs. At least it's not pixelated this week.
Yeah, it looks a lot better.
It does look better. That about does it for this episode of Crypto Market Today. But before we go, keep in mind that none of this is investment advice, and every investment you make carries its own potential risk or its own potential reward. And we hope that this broadcast helped you make a more informed decision based on your investments. And if it did, give it a like and subscribe.
Yeah, doing so not only keeps you alerted about future content, but it also ensures that we can continue bringing you the latest crypto news from around the world. And before we go, one more thing. Lucy and I would like to reach out to you, the viewer. Drop any questions that you may have about the crypto market or about a coin or a blockchain in the comments for a chance to have your question answered on next week's episode. We'll be sure to dive deep on that research to give you those great answers. Thank you so much for joining us on this week's episode of Crypto Market Today. We'll see you next time.